A credit score is a statistical number that evaluates a consumer's creditworthiness and is based on credit history. Lenders use credit scores to evaluate the probability that an individual will repay their debts. A person's credit score ranges from 300 to 850, and the higher the score, the more financially trustworthy a person is considered to be. Your credit score is incredibly important because it helps you to get a head start in the future. Normally, when you need to buy a home or a car, you can't afford the whole price. So you need to take out loans and mortgages that you'll pay off over a period of time. In order to get the best APR, that's annual percentage rate, on your loans, and to be approved for it, you need a good credit score. When you have a good credit score, you'll enjoy easier approval for loans and mortgages, lower interest rates, a larger credit line, and occasionally no deposits for financing activities. So the next time you want to buy a new phone, but don't have enough cash to purchase it directly, you may not even have to worry about the down payment. Students with no initial credit can start to build their positive credit in a few ways. The easiest is by being one of the authorized users on a parent's credit card, if they have good credit themselves. This can have positive benefits if everything remains to be paid on time, but potentially a negative impact if their credit shifts downward. The second way would be to have a co-signer if you need to apply for a loan. By having a trustworthy co-signer, students will have an opportunity to build their credit, and a bank would be more likely to approve their loans as long as the monthly repayments are met. Note that the co-signer has as much obligation as the original creditor. Therefore, co-signing for a person should not be done lightly. Another way to begin to build good credit habits would be to apply for a student credit card, which builds credit. Although most student credit cards have a low credit line, this may be useful to begin to establish credit in your name as long as you meet the monthly obligations. You can check your credit card, financial institution, or loan statement for their credit score. Many credit card companies, banks, and lenders have started providing credit scores to their customers. Another way is to sign up for a credit monitoring service, which can provide the score for you, such as your FICO score. Having access to your score helps to keep you informed. If you're checking your own credit score, it does not negatively impact it. It's important for all of us to know our credit score and to make sure that it's high. Having a good credit score allows us to access money easily and with lower interest rates. This way, it's easier to plan for the not-so-distant future. For additional resources, visit NYU iGrad for great tutorials and information, or speak to a financial education coach or a student link counselor. We're here to help.